Welcome back to Commerce Veda. The next video. In the previous video, we did branch debtors cost price method. Right now, reading this question, we should understand what is this particular question and which method to be followed. The question says, S Limited sends goods to Siliguri branch account at an invoice price. First of all, we understood this invoice price method. So as to show 20% profit on such invoice price. It means profit on invoice price. Now, branch sales are partly on cash and partly on credit. From the following details, prepare branch account. If they say prepare branch account in the books of HO, it is very clear that it is dependent branch. Dependent branch. As goods are sending to branch at invoice price, branch is selling that and branch sending back the money to the head office. So it shows the relation is dependent branch. So this sum we should do using invoice price method for dependent branches. Now let us start the solution. We should prepare which account here? We should prepare branch account. Which branch account? Siliguri branch account. Debits and credits. So, but before that, we also need to do some working notes. Working notes, I'll keep a provision for notes here. Right. So here it says opening stock of the branch at invoice price. So I'm recording here to balance brought down stock at invoice price, which is 8,000. Whenever I record stock at invoice price, I should understand that there is an element of profit included. So here I should write opening stock reserve, which is stock at invoice price into the loading is also on invoice price. So directly I can compute 1600, which I am recording here, by stock reserve 1600. So opening stock at invoice price and stock reserve loading, the net is recorded at cost. Exactly the theory what we discussed in the previous video on branch, where we said invoice price method always reverse the loading. Loading is nothing but the profit included in the invoice price on the exactly opposite side of the invoice price. If invoice price is goods opening, you post the stock reserve on the credit side. If invoice price is closing credit side, you post the reserve on debit side. So the first thing is recorded. The next one is opening stock at branch. Is there any opening debtors? Yes. So opening debtor, which is 1 lakh. Opening debtor is 1 lakh. Is there any opening cash? No opening cash in this question. So we already prepared first thing. Next, goods sent to branch at cost. So to goods sent to branch, it is given at cost price, but we are preparing at which price? Invoice price. So we should understand what is invoice price here. Now let us see here working note. Second working note. Goods sent to branch. Cost price is 4,80,000. add margin, or we can call it as loading. So it is 20% on invoice price. We learned that 20% on invoice price means what? 1/5 on invoice price. 1/5 on invoice price equals to 1/4 on cost price. 20% on invoice price equals to 25% on cost price. So I'm here adding 25% because the rate is given on invoice price, but I have only cost price. I should add the profit, which is 25% on 4,80,000 is 1,20,000. So the invoice price is 6 lakhs. If you cross check this, 6 lakhs invoice price and profit is 20%, exactly 120. So here what we understood is 20% on invoice price equals to 25% on cost price. This thumb rule we used here to identify the invoice price. Yes, we have taken cost price and the invoice price margin is 20%. 20% of invoice price equals to 25% on the cost price, and we got profit as 120, invoice price as 6 lakhs. If you multiply 6 lakhs into 20%, you get 120, which is 20% on invoice price, but with the same is 25% on cost price. Hope it is clear. Now go back here and write goods sent to branch at invoice price 6,000. Immediately reverse the loading. Goods sent to branch. I'll write loading, which is 1,20,000, which you know. I'm just placing the numbers in order in tens and 1,600, 1,20,000. Now this is done. Now I finished opening stock recording, I finished opening debtors, I finished goods sent to branch. Now goods returned to HO at invoice price. At invoice price. So here goods returned to head office at invoice price. So invoice price is how much? 40,000. Directly invoice price is given. So loading 20% on invoice price, that is 40,000 into 20%, 8,000. So I can record here by goods sent to branch. For the purpose we'll write returns 40,000 invoice price. Immediately to goods sent to branch, loading on the returns, which is 8,000. So we recorded even returns. Now comes sales, credit and cash. We don't record in the branch account. Bad debts we don't record in the branch account. We'll take it to memorandum accounts if necessary. Returns from customers we don't record in the branch account. Sundry branch expense. Branch expenses we normally don't record, but for branch expenses we'll get money from head office. So this 1,50,000, if you see there is no opening cash, no closing cash. It means branch don't have any cash. So how the branch spend the expense? It receives from the head office. Right. There is no opening cash in the question. There is no closing cash in the question. And the cash collected from the customer should be sent back to branch, so head office. So it means whatever the expense the branch incurred is actually received from HO. So we'll write to bank in bracket for expenses. How much? 1,50,000. See, there is no loading in expense. Loading is there only when stock is there. For all other things, whatever the amounts we should post, no reversal, nothing. Stock loading, these two are always together. Clear? Now expenses also I have written. What else I should do? They said credit sales and cash sales and cash received from customers. Here the working notes is very, very important. See, total cash collected. This is the fourth working note. Yes, the fourth working note we should write here is cash sent to head office. Cash sales, you get full cash, which is cash sales are 1,10,000, and collection from customers. How much you collected from customer? 650. 6,50,000. So total cash with you is 7,60,000, which is sent back to head office. So I'll write by bank from branch, which is 7,60,000. Now after this, we need to know our by balance carried down, stock and debtors. If balances are not given, we need to prepare memorandum stock, memorandum debtors to know the balance. But in the question, you have received closing debtor balance and closing stock balance. Both were given. So I'm going here. My closing stock is at invoice price. How much is my closing stock? 8,500. My closing debtors are also given, which is 92,000. So I need not prepare memorandum stock and memorandum debtors because both were given. But stock given at invoice price, immediately what you should do is, what is the loading in this? Again go back, fifth working note. Closing stock at invoice price 8,500. Loading is on invoice price, so 8,500 into 20%, which is 1,700, which you should exactly opposite this. To closing stock reserve to closing stock reserve 1,700. Note number 5 here, note number 1 here, note number 2 here, same with note number 2, and note number 3 here, and note number 5 here, note number 5, not 5, note number 4, and note number 5 here. So closing stock also I posted. What I did, I posted my closing stock, cash received taken into account, discount anyway I don't require because closing debtors is given. So all the information is given. What I can now do is prepare my account. What are my total credits? 1,600, 1,20,000, 40, 760, 85 and 92,000. My total credits are, I'm writing here, credits 10,22,100. What are my debits? My debits are 8,000, 1 lakh, 6 lakhs, 8,000, 1,50,000 and 1,700, which is 867, 700. So my credits are more. So I'm taking credits and my profit is to net profit to general P&L 1,54,400. Now we'll see whether this net profit is correct or not by doing a small cross checking the profit, right? Before that, I don't need this, just for my cross check I did. Before that, one more account I should do is goods sent to Silgore branch, debit and credit. Exactly, that the credits here will be the debits and the debits here will be the credits. So the credits here is to branch. What is to branch? 1,20,000, and again to branch 40,000, and by branch 6 lakhs, and again by branch 8,000. That's it. If you see, it is exactly at cost. So you have 6 lakhs, 6 lakhs 8,000, and 6 lakhs 8,000. 6 lakhs 8,000 minus 1,60,000 is 4,48,000 to trading account 4,48,000, which is exactly at cost. 6 minus 120, which is 480, and 480 minus 32, 440. Now we need to understand, which is not there in textbook, cross checking the profit. Cross checking the profit. For that I need sales. Cash sales 1,10,000, credit sales 6,80,000, and sale returns 14,000. Check once. Cash 110, credit 680, and sales returns 14,000. So this is my net sale is 680 plus 110 minus 14,000 is 7,76,000. Now I need to know my COGS. Opening stock at cost. My opening stock at cost is 8,000 minus 1,600, 6,400. Goods sent to branch at cost, which is 6 lakhs minus 1,20,000, 4,80,000. Figures I am taking from the branch account, and goods returned to HO at cost shall be 40,000 minus 8,000, 32,000. This is addition, this is deletion, and closing stock at cost shall be 8,500 minus 1,700, which is 6,800. So my total cost of goods sold is 6,400 plus 4,80,000 plus minus 32,000 minus 6,800, which is 447,600 is my COGS. So My total sales net were 7,76,000 and my COGS, cost of goods sold, is 4,47,600, leaving me a gross margin of 776 minus 447,600 is 3,28,400. From this I should deduct my expense. Expense is 1,50,000 and bad debts 4,000, discount 20,000. So my total expense were 1,50,000 plus 4,000 plus 20,000 is 1,74,000. So my net profit should be gross profit 3,28,400 minus 1,74,000 expense. My net profit should be 1,54,400 if I prepare my branch account. And I prepared my branch account, my profit is 1,54,400. This is simple cross checking the answer so that when you come out of the examination hall, you will get confidence. What I did, I took net sales, I took cost of goods sold, all opening stock at cost, goods sent to branch at cost, goods returned to HO at cost, closing stock at branch at cost. These two I deduct because they returned and not sold yet. So the COGS is 447 and net sales is 776. The difference is 3,28,400 is my gross margin. From that my expenditure 1,50,000 regular expense, bad debt 4,000, discount 20,000, leaving me a profit of 1,54,400, which is exactly matched with my final answer. So this is a simple technique to understand whether my answer is correct or not. With this, we completed sum from independent branches, first method, branch debtors method, invoice price also. With this, signing off for today. Let's meet in the next session with some more advanced sums, one or two advanced sums, and then we'll go to stock and debtors method in branch accounting, dependent branches.